Thank you for staying with us. Now, let's talk about tomorrow. Stanbic IBTC have a what shall I call it?
Plan.
A plan. Okay. They have a plan, which they have called the Sunset Benefit Plan. Now, you need to pay attention and listen carefully. This offers a funeral assurance plan that helps customers give their loved ones a befitting home-going ceremony without putting financial pressure on those left behind. It's my pleasure to welcome the Chief Executive, Stanbic IBTC Insurance, Akinjide Oremolade. Good morning.
Morning, ma. Thank you very much.
Thank you for joining us.
Thank you.
Now, what is this sunset benefit? In fact,
not sunrise, because it's sunrise.
Well, in fact, the word scares me. Sunset benefit. Tell us about that.
Thank you very much for having me, and I will say good morning to our listeners. I mean, as rightly said, Sunset Benefit Plan. It's a plan that provides cover for funeral costs. I mean, for us in Stanbic IBTC Insurance, before we came up with this particular product, we did a lot of research. And we realized that, I mean, when they go for funeral, you know, they have this financial burden on them, and at the same time, emotional stress. Mm-hmm. So we just felt that, I mean, what could be the reason? The reason is just that because they never plan, you know, for the future. And this was the reason why we brought up this particular, you know, product, so that invariably when people take up this product, they could provide for their dependents, and at the same time we have enrollees too that can be on the policy. You could take it, and then in terms of the enrollees, it could be the spouse, it could be the father, it could be the mother, it could be the mother-in-law, or also the father-in-law. So invariably, I believe is that if anything happens, you know, in the course of the policy, maybe death to the mother, the father-in-law, the mother-in-law, or the spouse, or even the policy holder, definitely there will be compensation at the end of the day. And then the other riders, the other benefits that come across in terms of this particular product. There's the interment, there's the grocery, there's the catering benefit, there's the child care benefit, and also the cashback benefit too. And then the policy in terms of when you take up the policy, there's what they call the waiting period. The waiting period is a period that if nothing happens to you, or if something happens to you within that period, the insurance company will not be liable. That's the waiting period. So for the policy holders that takes up the policy, the waiting period is for 6 months. And then for the enrollees that are part of the policy, the waiting period is for 9 months.
Mr. MD, please slow down. Let's say I take up this policy for myself.
Right.
So I'll be discussing with you, say, okay, maybe I'll take it for how many X number of years, or what?
Okay, one good thing about this policy, if you take it up with us, first of all, you as the policy holder, there's a particular age that we'll look at, which is between 18 and 65 years old. That's for the policy holders. And then for the enrollees that will come on the policy, they should
Who
not
are the enrollees?
Okay,
the persons for whom they are being taken. So if I take it now and I want to take it for my father, for instance, so my father is the enrollee.
Correct. That's it.
Okay.
That's it. So in the case of your father now, it should not be more than 75 years old.
Okay.
It should not be more than
75 years. So that means 75 below the age next birthday.
So if my father dies at 80, what happens?
Well, I mean, at 80 is not qualified to be an enrollee. That's it.
No, if I take it now, and let's say he's 72 now, and I take the policy now, and he doesn't pass till he's 80, what happens between the age of 75 and 80?
Okay. One good thing about this policy is that when you take it up, you can pay your premium for the next 5 years. After 5 years, it becomes a whole life. that means you don't pay premium at all. So in the example you mentioned right now, if your father, you took it up when your father was 72, and your father now passes at the age of 80, definitely will be liable.
No, it's English. I think, you know, maybe essentially you're saying anyone above 75 cannot be enrolled. Is that what you're saying?
Correct, that's it.
What does that mean?
Okay. What that means is that it's more like a combo. It's a combo policy. What do I mean by a combo policy? The policy holder in this case should not be more than 65. And then the enrollees that you put under the policy, that is your father, your mother-in-law, your spouse, they should not be more than 75. So if they are more than 75, they won't be entitled or they won't be qualified to be on the policy.
What's the risk?
Well, it's based on actuarial, in terms of the actuarial valuation, and then the way we'll be able to design the policy. We realize that if people are more than 75, in terms of maybe the death rate, it's higher. And then for us to be able to kind of weigh the premium that will be involved, I mean, it might be on the high side, which people might not be receptive to. So it was based on that we said, it has to be 75.
So older people die more. That's what you're saying. Don't worry, don't answer that one.
Okay, so if I want to come and enroll my father, for instance, what documents would you be asking me for?
Okay, for that, for the onboarding process, what we need from you is you have to complete the form, which we'll give to you, and at the same time your KYC. Which is evidence that particular address. It could be the electricity bill or maybe the waste bin bill. Yes.
Just to validate that.
Exactly. Just to validate in terms of the KYC.
Of course, of major interest to anybody who is interested in this policy would be the premiums that they have to pay. If I put my father as an enrollee, for instance, he's 72 years old. Will I pay premium for only the next 3 years, up until when he turns 75? If he turns 75 and he's still alive, then what happens?
Okay, good question, ma'am. If you take up the policy, what I said at the initial stage, you have to pay the premium for 5 years. Then
no matter the age of the person.
Exactly. Okay. No. For you as the policy holder, your age should be 65 below.
Or below.
Yeah.
Okay.
So if after you can pay for 5 years, that's the minimum.
That's it. After 5 years, you don't pay the premium again. It becomes a whole life policy.
So,
but I'm still paying.
No,
I'm not paying anymore.
Yeah, you're not paying.
So we only pay premium for 5 years.
For 5 years, that's it. That's it.
Okay.
And then there's another caveat that we have, which invariably could reduce the premium for you. In that case, you pay the premium up to the age of 70. But paying the premium up to the age of 70, at every 5 years, if you pay the premium first, second, third, fourth, on the 5th year, will give you what we call the cashback. Invariably, the 5th year, you don't pay premium.
Okay.
Then you continue again. Then when it gets to the 5th year of that, you don't pay premium until the person gets to the age of 70. The person will not pay premium.
So every 5 years, someone can enroll, for instance, for a parent or someone from when the enrollee is age 50.
Correct.
And you continue to pay the premium every 5 years. If the person is still alive until age 70.
70, yes.
And after age 70, you don't need to pay.
You don't need to pay again.
Any premium.
Yes.
But there is going to be some form of
a cashback. Okay. Because if you want to decide to say, you want to go through that route of 70 years. So every 5 years, you get a cashback, a full year premium that you don't pay on the 5th year. Or invariably, you can decide to say, let me just pay for the next 5 years. So after the next, the 5 years that you've paid the premium for, you don't pay premium again. So it becomes a policy that is already in existence.
Okay, if I am getting you right, we have just about 5 minutes. If I'm getting you right now, if you pay for 5 years at once, you don't pay anything anymore.
Correct.
That's forever.
Forever, yes.
So
if anything happens to the enrollees that you have put there, will pay the claims. If anything happens to you, the dependents that you have put as or the beneficiary will pay to the beneficiary.
If I'm trying to, so the person is 55 now, you pay 5 years for the person. The person may or may not die by age 60.
Yeah.
If the person continues until age 75, I have paid 5 years already, I don't have to pay anymore. That's what you're saying.
That's it.
Okay.
So if the person dies at the age of 75, if the person dies at the age of 80, we are liable.
But if I'm paying annually, I will continue to pay until
70. By the time you are up to 70, you stop paying. But like I said, if you decide to take that route, on the 5th year, you don't pay premium at all, because we see it as more like a cash back incentive to that particular client.
Okay. Give us an idea of what the bulk 5-year payment could come to.
Okay. It depends on, in terms of the pulse of the policy holder. Take for instance, maybe myself now, if I decide to take up this policy, or do I already have the policy? They will look at my age.
Yeah.
What's my age next birthday? Right? And at the same time too, the people that I'm going to put as the enrollee. So if I decide to put my wife as one of the enrollees, and I put maybe my parents or my parents-in-law, if they're not up to 75, I put them as part of the policy. Now, depending, for me, I can decide to say, I want to take up this policy. The minimum sum assured, that is, in terms of the exposure, the minimum is 500,000. And then the maximum is 10 million. Then for the enrollees, the minimum is 500,000. The maximum is 5 million. So in my own case right now, if they are going to calculate a premium, depending on, in terms of how much I can afford, the insurance company can now say, do you want to pay the premium on a monthly basis? Do you want to pay on a quarterly basis? Do you want to pay on a half-yearly basis? Or do you want to pay on an annual basis? So we are very flexible with that. So, like I said, in my own case, my age next birthday is 57. So by the time they calculate the premium, maybe top of my head, I'll be paying like almost 100,000, maybe on a quarterly basis. Whether to be on a monthly basis, it's going to be lower than that.
Okay. So if somebody is listening to us now and wants to talk more to you about this policy, where do they go to get more information? Okay,
we have on our website, which is www.stanbicibtcinsurance.com. And then they can always call us. The phone number is 270-6801.
Please, the website again.
www.stanbicibtcinsurance.com.
Stanbicibtcinsurance.com.
Exactly. Yeah.
Yes. And then the telephone number is 270-6801. Should you require more information about the sunset benefit plan.
Are there downloadable information on the website for this particular plan?
Yes. Even we have on our mobile app. The mobile app that we have within the organization. There is a Stanbic, the insurance, they have an app on insurance, life insurance. So once you click on that app, it can take you in terms of maybe this product, Sunset.
And that's on the App Store?
Exactly, yes.
No, not on the App Store, on their own platform, on their own Stanbic
IBTC
app. Yes.
Okay.
All of those information is also there.
Okay.
Now, how about, what's the minimum age of those who,
Not the enrollee. The person who is...
Okay, the policy holder, the
Yes.
minimum is 18.
18.
So between 18 and 65, definitely the person can take up the policy.
Okay. All right.
Okay.
Thank you, because
Mr. Akinjide Orimolade, Chief Executive Officer, Stanbic IBTC Insurance, thank you very much for coming to tell us about this beautiful plan, so that we can... So that we, even though it's talking about morbid stuff, it is morbid stuff that we cannot avoid. Thank you very much for coming to talk to us about this.
Thank you so much for having me. And I believe that, because I brought some flyers, which I will share with you.
Thank you very much. Thank you. Sunrise will return in just a moment with another interesting conversation. Do join us then.